Hello, this is a new episode of CFA Institute Sustainability Story. I'm Andres Vinelli, and today we are joined by Marcos Buscaglia, who's an economist, author, and expert on emerging markets, economics, and finance. He formerly headed Bank of America Merrill Lynch Latin American division and served as chief economist for Citibank Latin America. Marcos is the author of Beyond the ESG Portfolio, How Wall Street Can Help Democracies Survive, a new book that explores the role of capital markets in funding autocrats around the world. Hello, Marcos. Thank you for being here.
Hello, Andres. Thank you very much for hosting me, and I'm very enthusiastic about the conversation.
You read a path-based book on the effects of capital markets on funding democracies and funding autocratic regimes. So why do you think, Marcos, that investors should care about democracy when they want a decent risk-adjusted return?
Okay, yeah, that's a very good question. I mean, they should care because there is a democratic decline in the world. I mean, since the year 2006, particularly in emerging market countries, we have seen a big democratic decline. I mean, there is unanimity among, democracy watchers such as Freedom House, Economist Intelligence Unit, that democracy has been suffering and has been basically abandoned in some countries such as Russia and Turkey, in the last couple of decades. So they should care, and on top of that, what we learn about Russia is that what happens in a country when it has a democratic backslide, it doesn't get restricted to that country, but sometimes it has, repercussions in other countries, including possibly in the country that you're living in. For instance, what happened with global markets, food prices after Russia's invasion, to Ukraine and energy prices. Second example is what we're witnessing now with Venezuelans, trying to get to the U.S., through the border. So Venezuela is the biggest humanitarian crisis in a country that has not been struck by a war or a civil war. And so Venezuela has had a democratic decline. You say, why would I care? Well, it has a repercussion in the U.S. So that's the first thing. I mean, there is a democratic decline. And the way I think is, so the first thing that you should care is about to do good. In the same way that markets are now, correcting and implementing, ESG strategies and investing in green bonds. I mean, because basically that is a response to the investors' concerns about the climate and other, issues like, gender equality or the protection of minorities, et cetera, et cetera. Well, we should care about democracy for the reason that I say, there is a democratic decline, and that democratic decline oftentimes has implications even for investors in the Western democracy. Second, there's a second reason, although, to be perfectly clear, the research is not conclusive on this, but I think that in the long run, you should also do better investing in democracies, right? Why is that? Again, the research is not, the academic research is not conclusive on this, but the idea is, democracies tend to grow faster. There is more consensus on this, So if democracies grow faster than non-democracies, companies that are headquartered in democratic countries should also do better than companies than in non-democratic countries. But again, I say this with some trepidation in the sense that there's no conclusive research, as you probably know, on this.
Super interesting. And when did you first notice this, and how made you put the spotlight into this phenomenon? Was it the invasion of the Ukraine by Russia, or was it before then?
No, it was before. As an economist covering Latin America, I discovered after many, many years that knowing about the shape of institutions in countries is very important for what you do. So institutions are very important. I mean, it's not that just that you have to make, GDP, inflation, etc., forecast in a vacuum, but basically politics is very important and institutions are very important. That was the first step in my career. And then, there was one day in which I had this idea, this eureka moment, so to speak, that I was visiting a client in New York, and when Cristina Kirchner was about to become president again in Argentina. That's my home country. And basically for the third time, I mean, now as vice president, but but in a ticket that she had chosen, so everyone knew that she was going to call the shots there. I'm talking about late 2019. And I went to see this client, and the client said, well, if the new government, basically implements sensible policies, markets are going to, be willing to finance Argentina. And I came out saying, this is not right. This is a very nice, smart, and, democracy-loving client. But, basically, I suspected that Cristina Kirchner would try to undermine democracy in Argentina, basically at least by overriding, judicial independence to get a, free from jail card. So I said, this is not right. And so after that meeting, I started penciling a small piece that I published in the Financial Times blog Beyond BRICS in early 2020, and I got a lot of attention. I said, I'm hearing of something that is a lot, it's bigger than I thought it was. I got, a lot of attention from human rights activists and journalists around the world and investors, so that they say, oh, what you're saying is right. So that's why when I decided to write the book, and of course, what happened in Russia, reinforced, my views.
Interesting. So do you think that this is something that happens, say, in the case of Venezuela, Argentina, and then you mentioned Russia? Is it a series of anecdotes, or do you think that there's something structural going on that basically it's hard to stop, or we need to put the magnifying glass and say, well, how can we change the structural events here?
Very good question. I think it's structural, right? And most importantly, it's not only structural, but it's mostly people end up investing in autocracies unwittingly. I dare you, Andres, to when we finish this podcast, to go and check your, 401k, Roth IRA, and I'm pretty sure that you will be in your portfolio financing autocracies. And why is that? Because either investors directly through ETFs, right? Or indirectly when, our pension funds or, that, the pension funds, send the money to investment specialists, professional investment managers that specialize in emerging markets, through mutual funds. All these, both ETFs and mutual funds, most of them are passive investments in the sense that they track indices, right? So you buy an ETF and say, well, I want to, let's say, and we're discussing, I want to diversify and invest in emerging markets. So you will go and check for ETFs that track emerging market stocks or emerging market bonds. Well, these indices include autocracies. Let's say the JP Morgan, let's say the Morgan Stanley MSCI stock index that, is the most widely tracked, basically, for instance, 30% of it is China, So you're investing 30% of your money in Chinese companies, which many people argue for practical purposes, are, like quasi-sovereigns. I mean, they should, they have seized the Chinese Communist Party cells inside. They should, they're not real private companies, right? And then the most, follow track government bond index, the JP Morgan MB Diversified Index, also has, out of 76 countries, 35 are, what I call non-democratic in my book. I can elaborate on why, and 16 are what I call highly autocratic. So, sometimes you see, when we saw what happened, for instance, in Venezuela, that you saw, I saw this in real time. You saw democracy sleeping, and you saw at the same time investors putting, money in Venezuela. Well, Venezuela represented, not a huge percentage of the MB, but given that the bond yields were so high, you as an institutional investor, you couldn't avoid being invested in Venezuela, because if you did, when Venezuela bonds were performing, you would miss, the index, and, by a big, percentage. And then the pension funds, that were putting money on investing in your company would say, oh, you're not a good manager.
That's very, very interesting, right? Because it's not only the mechanical passive investment that forces you to put money there, but it's also the folks who are trying to be active in their investments, in practice, they have to notice the benchmark index, right? And that benchmark index basically nudges big time towards decisions that you might not make, such as investing in autocracy. So this index hugging behavior, very important in this area, right? So what can an investor do to get out of this unwitting trap there?
Yeah. So in the equity world, there are a few ETFs that are starting to include, democracy considerations. One is an emerging markets index, and one is a ex-US equity index, the benchmark, where that they compare to. The fixed income world, I have not seen any yet. Institutional investors have some alternatives in the equity and the bond market to invest. But to be honest, there are very, little alternatives now. The way I see my work here is I see my work as an activist in the same way that, that environmentalists were 20 years from now, 30 years from now. I mean, 20 years from now, Andres, we seldom talk about ESG. Most of the money did not follow any ESG standard. And it was the activism, of investors that forced the market. I'm talking about institutional investors and other market players to add ESG mandates, considerations to their investment decisions. So I see where we are just starting, but you cannot address a problem that is not seen as a problem. And I think that my job with the book, is to convey, that this is a problem because there is a democratic decline. And markets have been involved with this democratic decline. Let me tell you the story that I like the most about this. Very, very nice story. Last year, Turkey had elections, presidential elections. All the polls were pointing to Erdogan losing power. And basically, he was spending like crazy. The government was spending like crazy to allow him to win re-election. Well, 41 days before the election, the Turkish government issued the first ever green bond of the country, $2.5 billion.
What a coincidence, I might say. Yeah.
What a coincidence. And markets cheer that because, of course, we all love, green bonds, but money is fungible, and so basically, even if that money was allocated to green investments, it is freeing space in the budget to spend in other items like winning a re-election. And Erdogan won the re-election. This is a statistic from a couple of years ago, but out of 35 countries, I'm talking about the governments now, issuing GSS bonds, 11 were autocratic countries in a way that I defined in the book, and 4 were highly autocratic. So there is greenwashing there. And so the point is, I think this is a problem. That if we had these considerations in mind, the market would have not bought that bond 41 days before the election.
Fascinating. We just don't have the habit of checking for this. It's very interesting because the retail investors, basically, the surveys say that they want to understand what companies they are helping with their money, right? And they want to know what they own. And many people have specific goals or things that they want from their money and they don't want from them. For instance, there's in the U.S., a lot of surveys show that people are interested in helping out create good jobs that are not of low quality, but jobs that provide a livelihood and provide a career. Most people would say that they favor democracy, and we all have an intuitive sense that democracy is sleeping around the world. What is it that we have to look to then? If you would say, well, gee, how do I know if this jurisdiction is of high institutional quality or low democratic quality? Where do you go for that, Marcos?
Okay, yeah, good that you asked because I forgot to tell you before. Because there is an initiative that I like about that. It's called defunddictators.org. It's a site basically created by the Human Rights Foundation. The chairman of the Human Rights Foundation is Garry Kasparov, the former chess master and a political activist, Russian political activist. And so you can go into that site and enter the name of any ETF that is that is an emerging markets equity ETF, and check when it is investing. So you can check that, okay? So that's one alternative. Of course, for bigger investor, I mean, if the people watching this are institutional investors or pension fund managers, you can go to the institutional investor that you're putting the money under management and say, well, you have this mandate. We want to expand into emerging markets, but we want to avoid countries X, Y, etc. And let me add something that is very important, because I get this question very, very often. That is, how do you measure, democracy? And it's a contentious issue. I mean, they're not perfect measures, but there are good news on this. And that is, we check, and the correlation between the main democracy watchers indices, like Freedom House, Economist Intelligence Unit, and VDEM. VDEM stands for Varieties of Democracy. These are the main three that I use in the book. The correlation is very high. It's close to 90% among them. So they use different methodologies, the different inputs, but they are tapping into the same reality. And that's very encouraging. I mean, in the sense that, you see their indices when you see democratic decline in a country, like, I don't know, what happened in Venezuela early this century, they yes, sometimes one goes up before the other. The same that happens with credit rating agencies. Their correlation is also very, very high. Yeah, sometimes, one puts a country, one notch above, below the other one, ahead of time. But at the end of the day, they're tapping into the same reality. Well, the same happens with democracy indices. So, of course, it's not easy, the measurement of democracy, because democracies do not die the old ways. Typically they do not die through coup d'etats. They die through tinkering with the judicial independence, with the electoral process, with the freedom of press, and they're little by little. And so it's not a binary variable, like it used to be some decades ago, where you had either democracy or you had, a military guy in command. Well, but still, we can do that. So if you're an institutional investor, you can go to your fund manager and say, well, I want to avoid investment in countries X, Y, Z.
Super interesting, because usually on these matters of politics, there are three ways that one can act. We can vote with our feet, right, and leave a place that is becoming less democratic or totally authoritarian. You can vote with your wallet, which is what we are talking about, and now what I hear from you, Marcos, is we have no excuse. If these indices, be it the Transparency International, was it, or or the other, they are highly correlated, so they're good enough. All of them are good enough for this. So you can vote for your wallet. I'm going to ask you perhaps the last question about the third way to vote, which is to use your proxy vote. People can perhaps have solicit companies to do X, Y, and Z, for instance, not to invest in regimes that are not appropriate to democracy and all that. What's going on that front? Has there been any, because sustainable investing and ESG has had a lot of developments in that area where people put out propositions and they vote. Has this even happened in this area?
Not in a institutionalized way, in the sense that when you look at ESG corrected indices, let me tell you, ESG scores in general, and for the same reason, ESG corrected indices, they do not take into account democracy. Let me tell you another very nice story. By the time Russia invaded Ukraine, the ESG corrected version of the JP Morgan NB index, that is the most tracked index in the emerging market sovereign bonds, dollar bonds, the ESG corrected one, in that one, Russia had a bigger share than in the non-ESG corrected.
No.
It was a small difference.
No. How can that be?
I don't know exactly, because I didn't have the whole index. I just read in an article, but I guess it's because some other countries were excluded from the ESG corrected one because they were, bigger polluters. I don't know exactly.
Okay, so there's some uglier than than the last. Yeah.
No, that tells you that ESG scores are not correcting for democracy. But I say in an institutionalized way because then when you talk to people in the market, there are many investors that do that in a tailored way. So I have some, friends who manage, hedge funds or investment companies say, oh, no, this big pension fund came to me and say, well, I want an emerging market, strategy, but excluding countries, some people is doing that already, but in a very ad hoc manner, not I have not seen that in an institutionalized way. The ones I think that are more advanced in this are, Northern European pension funds. These guys have been more active in excluding non-democratic countries from their portfolios. So, but again, in an institutionalized way, I have not seen that. And that's because as far as we check, for the book, my research team and myself, we went into books and articles and, in most of them, we didn't even find, when you go to the index on the back of the book, the word democracy was not there. So basically, I would not be fair if I said that nothing is being done because I hear from a lot of people in the industry that in an ad hoc manner, this is implemented in different ways.
Interesting. I mean, it seems to me like this is one of those situations that we could all be collectively blind to something, but once you see it, you cannot unsee it, right? And once you know that...
I will use that.
Okay, you can have it.
You cannot unsee it yet. I like it.
You cannot unsee it. And it's great for several reasons to focus on democracy, especially as we see how real consequences of excessive discretion by autocrats could lead to poor outcomes. And also, they erode the business environment, right, that folks really need in order to develop their activities. So even though it's not very clear because it's hard to measure whether these two things are linked in this economic fashion through returns, we do know that, well, you just cannot rely all your investors on the whim of one trader that might wake up and say, well, that he or she might not need you.
We're having so many examples, recently of the downside risk of that. Look what happened with Russia. Look what is happening with China. So basically, we have seen a lot of downside risk from investing in autocracies. So again, I don't want to overemphasize that point because, to be honest, the research is not there. But intuitively, and with the many examples that we're seeing, it makes sense to me that it's not only that you're going to do good, but you're probably going to do better,
Well, Marcos Buscaglia, author of the new book, Beyond the ESG Portfolio, How Wall Street Can Help Democracies Survive. This is a big challenge for the field of sustainability investment. Now we have seen this picture, Marcos, and we cannot unsee it, but what we can do is check out your book. But thank you so much for sharing your perspective, Marcos.
Thank you, Andres. Very nice talking to you.
Thank you. Until the next episode.